Here in Washington state, it may come as a surprise to some people that insurers are currently allowed to use people's credit scores as a way to determine how much they pay for insurance. This year, a bill proposed by Insurance Commissioner Mike Kreidler, Governor Jay Inslee, and prime sponsored by Senator Mona Doss would prevent this practice. The bill has been passed out of committee, but has been significantly amended and stripped of many of its provisions by 5th LD Senator Mark Mullet, who is chair of the Senate Committee on Business, Financial Services, and Trade. To talk about what all of this means, we have Senator Mona Doss, Insurance Commissioner Mike Kreidler, and Senior Policy Advisor for Governor Jay Inslee, RaShelle Davis. And hello to you all. Commissioner Kreidler, I'd like to start with you. I know you've been wanting to ban this practice pretty much since you took office in 2000. In what ways do you see this as harmful for people's credit scores to be used in determining their insurance rates?
First, Stephen, thank you for the invitation to join you in this discussion.
Yeah.
The second would be when I came into office 20 years ago and was elected in the year 2000, the use of credit scoring was just being introduced at that point. It was not a common practice from the standpoint of the insurance industry up until the time I was elected. Previously, they'd relied on people's driving records and other factors for underwriting as opposed to looking at somebody's credit. And it's not used to make sure that they actually pay their premiums, which would be the natural conclusion I think people would come to. But, they pay that 6 months or a year at a time, whether it's homeowners or car insurance. And so that's not the issue. The company can always require you to pay on a monthly basis if they have any question about whether you're going to be able to pay or not. The issue is they look at it and make a judgment call based on looking at your credit, whether you're a credible individual who or not. They'll come to that conclusion. So if your credit score is low, they're going to say you're more likely to file a claim on your insurance policy. Therefore, we're going to charge you more. So even though you might be the most reliable, steady person in the whole world who takes good care of their car and takes good care of their home, you're going to be told for your car insurance and for your homeowner's insurance, you're going to have to pay more because you're in a category where it's more predictable that you might file a claim, not make payments, file a claim against your insurance policy. And that's just inherently wrong because it's a judgment call about individuals as to whether they're credible people or not. And that is an unfair judgment. There's other ways of being able to do underwriting like they were doing before I came into office.
Well, so as I said in my intro, we know that this practice, when it plays out, can impact lower income people and people of color. I'm wondering if you can share some of those numbers with us. How much more do lower income people and people of color pay when insurance companies use their credit scores to set rates?
Well, now you have to bear in mind that the insurance companies use a wide variety here. They might use credit for 40% of their underwriting or 60 to 70% of their underwriting for another company. So you can't generalize as to how much weight they're putting on credit as to how much they're going to do it. But for absolute dollars, which you're looking at, I mean, we're literally talking for somebody with a basic car insurance policy that you could pay hundreds of dollars more than somebody with a good credit score with everything else, every other factor that you have, your driving record, everything else. But they have a good credit score, but they're going to wind up paying hundreds of dollars less per individual.
A report from the Consumer Federation of America, as my understanding, showed that safe drivers with poor credit pay 79% more on average than a driver with excellent credit. And this is for liability car insurance only. Senator Doss, bring you into this conversation because you prime sponsored this bill to stop this practice. This is Senate Bill 5010. Tell us about why you did this.
Well, thanks again for having me too. It's such a great conversation to have and an important one. I think I've been in the mortgage industry for the last 16 years, and I think most people have no idea that their credit score is being used not only to determine their rates and how much they pay for insurance monthly, but whether or not they will get insurance. And as our state is slowly recovering from the COVID-19 pandemic, I know it did such a huge financial damage to many individuals and businesses across Washington. And we are going to see credit scores go down as folks struggle to pay their bills and manage their credit. And then their insurance rates are going to go up. And so when I first talked to the commissioner's office about this bill, I understood it immediately because credit scores is something I know about intimately, having been in the business for 16 years. So I really sponsored this bill because I think it is an unfair practice. I know in my own mortgage business, I pull credit, often and frequent. And what I see is homeowners have credit scores that are higher. Folks that have their credit limits that are lower their credit scores are, the folks that have don't have as much credit card debt, have higher credit scores. And those folks are generally, communities of color definitely have lower credit scores. And so I wanted to ban this practice. I'm excited about this bill. And it was really why I wanted to do it, because I know intimately how credit score really does affect everything, especially interest rates. And not only that, but your mortgage interest rates too. So, something I know a lot about.
And you mentioned how the pandemic has really played into this, and I want to circle back on that in just a moment. But talk about what happened to your bill in the Senate Business Committee. What happened there? How was it amended? How did this process happen?
Well, there was an amendment put on the bill in order for it to leave committee, and what that does is it allowed the insurance companies cannot pull new credit to determine rates. So if somebody's rates, I think they recast them every 6 months to a year, it will freeze their credit score for 3 years. So folks who have experienced credit score increase or decrease, I should say, because of the pandemic, if they weren't able to pay their credit card bills or went into forbearance or whatever on their mortgage, their credit score, their insurance rates would be frozen for 3 years. They wouldn't be able to raise their rates. However, for anyone getting new credit, or let's say you're dropped from your credit and you have to go out and find new credit, or you buy a new house or get a new car or whatever, they are then still able to use whatever is your current credit score rating, because there's no other way for them to know what your credit score was pre-pandemic.
So if you could just encapsulate this for us, what specifically does the bill mandate now in its current form?
In its current form, it freezes credit scores for 3 years. Insurance companies have to use the higher credit score. So if they get a new credit score and your score goes down, they have to use the previous one. If your score goes up, you do get to have a better insurance rate.
Understood. Commissioner Kreidler, what do we know about the insurance lobby's role in crafting this amendment?
Well, they apparently played a very significant role in working on amendments because we have an email from committee staff suggesting that if we had further questions, to go to talk to an insurance lobbyist's attorney.
It is my understanding that when the pandemic broke out, that you spoke with insurance industry CEOs and specifically asked them not to do things that would harm marginalized communities. I'm wondering, have you spoken to any of those representatives since this bill has been amended?
It was an open invitation, and I'd hoped that I would be hearing from them. And it was even implied that there would be, so to speak, an extension on their part to have communication. I haven't seen it yet. To a company CEO, they spoke very broadly about the necessity for addressing this issue of equity, and then asking them very specifically about it, particularly at a time like this with a pandemic. How were they going to respond to it? This is, of course, this is not a problem that was created by the pandemic. It was a problem before It'll be a problem after, but it's also a problem heightened because of the pandemic. I have yet to hear back from them. My personal experience has been with the insurance industry. They tend to operate a lot like sheep. For the sheep all go over to one corner, everybody else goes over to that corner. If they go to another corner, then they're all going to go to another corner. They tend to be very much driven that way. So they've taken the approach of, well, if my competitors can use this tool, we're going to continue to use it unless you take it away from us. We took away some of the tools that the insurance company used historically. We called it redlining, and we banned it, and they readily adhere to it. They'll readily adhere to banning the use of credit scoring and probably wrap themselves around it and say, we were always questioning whether this was the right thing to do. We're glad that it is banned now. Because it's pretty much what they say about historic redlining, which was very clearly racist.
Yeah, but setting aside the fact that I am moved to ask you about your role as shepherd in all of this, I will refrain from doing so. But yeah, you lay out a compelling argument there. And RaShelle Davis, I'd love to bring you into the conversation here and just ask you generally, what has the governor's reaction been to all of this?
Yes, so the governor has been very clear that he wants the bill reverted back to its original form. Last week, the governor was part of a press conference. He held his weekly press conference, and he told legislators, that he would like to have the bill reverted back to its original form. That was the bill that he co-requested with Commissioner Kreidler. And there's overwhelming Democratic support for this bill. There were 21 sponsors on this bill, and there really is not a policy reason for not moving the original bill.
This is circling back to something that Senator Doss said. A lot of people have been struggling financially so much during the pandemic, and one would imagine that there are things that are happening that are often beyond their control, that are hurting their credit scores. And I'm wondering, how might that factor into how this amendment to this bill would impact those people?
Yes, you're absolutely right. People are struggling, and we hear every day from Washingtonians about how the pandemic has impacted them. Unfortunately, this bill isn't going to solve those issues related to the pandemic. We also just don't believe that this is a permanent solution. It's just a stopgap because it only prohibits the use of credit scores over the next 3 years for existing customers. So if you go to a new insurance company, that new insurance company can use your credit score as a factor for determining your rate.
Understood. I'll ask you about a couple of the arguments that we have heard for the amendment. One is a concern that using individuals' driving record for insurance rates is more discriminatory because Black, Brown, and Indigenous people tend to get pulled over at a more disproportionate rate. What's your response to that?
Yes, I am acutely aware of driving while Black as a Black woman. I know that, and I know that there's ample data to support this. We're not disputing the fact that there is disproportionality in the criminal justice system and in traffic stops. We're not disputing that. The governor recognizes it, and he's leading on criminal justice reform. But we don't believe this is an either-or situation. We believe that both situations need to be fixed. We believe we need to end the disproportionality in the criminal justice system and in traffic stops, but we also believe that we need to end the use of credit scores while determining an individual's rate.
Yeah, so it's not an either or, it's the both. And then Senator Mullet was quoted in a piece for Cairo saying basically that senior citizens on fixed incomes have a long history of paying their bills on time, so their credit score is high and they would be hit negatively if the original bill were to pass. What are your thoughts on that?
I actually disagree. Unfortunately, we don't know how insurance companies actually set the rates. That is all secret. So no one knows the answer to this. We simply don't have the information, and I don't want to speculate on how insurance companies will respond. But I strongly believe there's no basis for why insurance companies should increase the rates on existing customers.
I would also just point out that I have viewed a memo from the state director of the AARP urging Senator Mullet to pass the original bill. Senator Doss, you, of course, would like to see your original bill pass without the amendment. And I'll just ask you, and this is a technicality, but for those who may not be familiar, is it possible for a bill to be restored to its original version once it has passed out of committee with amendments?
Yes, from what I understand, that is absolutely accurate, that the bill can be restored. We just don't have to accept the amendment on the floor when it runs.
Any indication when this bill might get a floor debate?
Well, we have until next Monday to make sure that it gets across out of the Senate. And I do, want to highlight that we've received letters not only from AARP, but also from the Black Lives Matter Alliance. We've also received letters from the Build Back Black Better, I think, Alliance. And so we're hearing loud and clear from communities of color, from the AARP, that they want to see the bill in its original form.
Commissioner Kreidler, if this bill remains in its amended form, would you still want to see it passed?
No, there's no reason to have it pass at this time. It does it does nothing to address the underlying grievances here of the inappropriate use of credit scoring, making generalized statements about individuals and saying just because you have a low credit score, that somehow you are less a credible person, therefore you have to pay hundreds of dollars more than somebody else. There's no justification for that, and this amendment effectively perpetuates that. Only individuals who have been fortunate enough that they don't fall in at the right point in time are going to be fortunate enough to even take advantage of this particular provision. Most people wouldn't, because the average insurance company won't even underwrite with credit for every 3 years. So if you wound up having a policy renew, and then you came back and you look for a freeze, they're not. By the time this bill goes into effect, or with this amendment, we're talking about later this year. How long has the pandemic been going? How much ravaging has it done to your credit? Yet you may be still have an insurance score based on that. Nothing, if you freeze it, it's not going to do you any good because you've already been harmed by lower credit. So no, this is one that doesn't deserve to be respected as somehow trying to help during a pandemic. It is nominal at best, and actually may be harmful at worst. And so from that standpoint, no, it's better to not have it pass at this point.
Understood. And RaShelle Davis, I'll just ask you, what is the governor's feeling on passing the amended bill?
No, the governor's been clear. He wants and prefers the original version. The governor doesn't make any sort of commitments or threats that he'll veto a bill, but he has been talking with leadership and made it clear that the original bill is what he requested, and that's what he'd like to see come to his desk.
Well, Commissioner, I will put this to you as our final question, because we have a number of people watching and listening, ready to take to the phones and email. If you see the possibility of restoring this bill to its original form, would you have a call to action to those people? For example, people in Senator Mullet's district. What would you like them to do?
Well, regardless of which district they're in, I'd certainly encourage them to reach out to their state senator. And let them know that this is an important piece of legislation. I can't say enough about the good work that Senator Doss has done in leadership and getting this bill to where it's at right now. So we're having this discussion at this point. I'd like to see it get across the goal line with a success, and that is a possibility still, depending on if and when it comes for a vote on the floor. So I'm urging people to tell their senators to approve the bill as submitted, which means Senate Bill 5010 without amendment, without the committee amendment specifically, have that not apply, and therefore that would take us back to the original bill. So urge their senators around the state, reach out to the people around the state to notify their senators to tell them that they need to keep the bill in its original form. And that's what I'd certainly see is by far the most profound. And I certainly appreciate the input and background and support that the governor's office has lent to this effort. They've done an incredible job too.
Yeah, likewise. And I will just say you have done that. You have reached out through your words here to people across the state to take the phone. So again, the call to action is to call your senator and ask them to push for the bill in its original form. Senator Mona Doss, RaShelle Davis, and Commissioner Mike Kreidler, it's been a pleasure. Thank you all so much for joining us this morning.
Thank you.